Alright, welcome back to the Happiness IRA, where we talk about how money weaves itself into your lifestyle. Last week I talked a little bit about our intuitions. We have two different types of intuitions. One is spot on, and we need to trust those wholeheartedly. Those are our values. It's the way we use our money, and we need to keep using it in that way. And the other we're going to be talking about this week, and they are intuitions that are counter to what we should be doing with our money. I want to house this in terms that you completely understand from head to toe. Let's say that you have this dress that you have been scoping out at Macy's. The dress retails for $150. Macy's just announced that they are going to have a sale, and instead of $150, it's going to be $99. You're going to go there and buy that dress. Likewise, if Macy's has that $150 dress, and one day they say, oh no, we're selling this dress for $200, you're much less likely to purchase it because you don't want to be spending more money than you should be. Now, wouldn't it be a crazy world if you went to that same Macy's and you heard that they were having that sale and you thought to yourself, if they're having a sale on dresses, it must mean that they're not doing very well. I don't think I'm going to buy it because Macy's is probably going out of business. So this is what we do all the time with investing. Today I want to go over a little chart with you that I think is really helpful in talking about the emotions that tie in with markets and where they're at. Now, this conversation is not meant to predict in any manner where we are sitting today in the stock market. I have no crystal ball, and I'm pretty sure you don't either. Let me help you get acclimated to this chart that you are seeing. First of all, that curvy line, that is the market direction. So at the beginning, the market is climbing and growing, and it feels great. And then you see that it starts to decline, starts to correct, starts to drop, and finally it turns back around and starts to grow once again. Now, those dots all along the way, that is our emotional reaction to what's happening in the stock market at that given time. So you'll see it starts with optimism. The market's growing. People are optimistic about the direction that it's heading. There's excitement and then thrill. People are saying, wow, I feel great about this investment. And you'll see that the maximum point of financial risk is right there at euphoria. The market has been doing so well. Everybody and their brother have been saying, gotta get into the stock markets, I'm making money hand over fist. As the market is starting to decline, first thing, there's anxiety, denial, oh, this is just a temporary setback, I'm a long-term investor, I'm gonna stay plugged in. But then fear and desperation and panic, and eventually capitulation. That instinctual, intuitional fear. Maybe the markets just aren't for me. I cannot handle this. Then as the market continues to grow, once again, there's hope, relief, and eventually optimism. And this cycle continues on and on. So why do I bring this up today? Our mindset, for some reason, is so counter to all of the other financial decisions that we make with our purchases. So whether it's that dress or even a house, we're always looking for a good deal on the same quality item that we want. But when it comes to the stock market, it's like we've compartmentalized it into a different space of our mind. We're no longer making purchases, it's just our money. So if the market is starting to decline, our mind, our brain, our emotions are telling us, get out. Yet we don't really treat our other purchases in that same manner. All right, friends, that's all I have for today. Thank you so much for tuning in. I appreciate it greatly. And if you have yet to click that big red button below, please go ahead and do so now. I put out a video a week. My videos tend to sit at the intersection of money and psychology. It's called behavior finance. And the reason is that I believe if you understand why you're doing what you're doing with your money, you can much better direct it and have a much better financial future. So with that, I will leave you and you take care.